Absolutely fantastic, and you are still with us right here on the hashtag Y in the morning. I'm Brian Sakwa. In just a bit, we'll be delving into an interesting conversation, and we are inviting you on our hashtag as well. And we've also asked you a question: how is the current state of your business right now, also the situation that we have in the country? I'd love to see and sample your feedback, but towards the tail end of this chat that I'm about to have with my very powerful guest who is live with me in studio, we're going to talk about why the youth need an insurance cover, and also what exactly does it take to navigate around that space. There may be insurance policies, especially at a time like this. And now there's a clause in the finance bill as well, by the way, that talks about the motor vehicle circulation tax and how it's going to affect excise duty, and then how that again will have a pushback on insurance agencies. And this again brings in the Insurance Regulation Authority as well. And I'm pretty sure the heat is just about to get turned up. I'm being joined live in studio by Abraham Masibo. He is a client relationship officer at Octagon Africa. Great to have you again, Abraham. Maybe I want us to get straight up into the conversation because people have seen you here before, and good to have you back again. For a young person who's watching right now and they want to get an insurance cover, first of all, why should they have an insurance cover?
Okay. I think I bring it far from the start, probably. You know, the most exciting part about life is, you know, when you finish college and you're about to begin your own life. Lucky enough, for those who got their jobs at, you know, immediately after campus, you are now living a life that, you know, you make your own decisions. You're earning your own cash, somehow not fully dependent on your parents. So how you decide to use that cash or spend that money will define how your future will be somehow. And insurance is part of the things that we advise that young people should take up as early as early as possible, with the benefits that, you know, we'll explain moving forward on how that is important to them. You know, getting money and beginning to earn from it and probably planning about it is also somehow exciting, because members get their money, you know, we earn that income. We have to understand that there's tax that comes from it. And then comes to expenses, then the savings, and now investments. So that, you know, all couples up to what and how best insurance can help you to keep forward and, you know, continue doing what's best for the sake of your future development and personal financial planning.
Are there maybe like types of insurance covers as well? Yes,
different types of insurance covers, ranging from medical insurance, which, you know, is quite important. Of course, the government is trying to work on the NHIF, what they're calling the shift, that might also be, you know, beginning July.
And we are parting with 2.75% of that money.
Yeah, of your gross salary. We're also talking about life insurance here, you know, which ranges from the endowment policies, investment plans, and even, you know, coming even to the money market fund. It's also part of the insurance of just a pot that supports you when you get a loss. So of course, coming all the way to the personal insurance, whereby you're insuring your car, your phone, probably your house, and all that.
Somebody can insure their phone?
Yes. It's part of what we call domestic insurance.
Oh, domestic insurance.
Yes.
After some come and delve into like the nitty-gritties of now the insurance.
Yes.
Because a lot of people will say, you know, I just want to insure. But I've heard celebrities who said, is it insured or assured?
Insured.
Oh, it's still insured.
Insured. You are the assured.
Oh, you are the assured person, right?
Yeah.
So I've seen celebrities who've insured their body parts. I think Mainak again, Young Classic, has insured his voice. He says the day he will not be able to broadcast, insurance companies will be able to pay him for that time that he'll not be in work. So I think it's interesting. Maybe you can also talk about that. Is it possible for a person to insure a certain facet of their life?
Yes, it's possible. You know, insurances are trying to find a way to be accommodative. Also probably just give people an assurance that, you know, in fact, for the sake of insurance, even doctors insure themselves, that, you know, I'm a surgeon. So I eat or I get provision from this hand when I do the side surgery. So at any point when I'm no longer working, we usually call it critical illness.
Yes.
Not really critical illness, but I think it's more like critical illness or something like that, or accidental. So if in any case I get an accident and I lose my hand, I can no longer do my surgery. So at that point in time, the insurance has to, you know, more like pay me an amount of some assured to just give me going, because I'll no longer be working anymore. So you can also go and insure your voice and say, you know, at any point when I lose my voice and I can no longer speak because this is what feeds me, then probably the insurance will give me a specific amount as per the agreed. So of course you pay a monthly premium towards the same, and at the point when you need insurance, or when you need that them to come through, probably come through and give you that sum assured.
Yeah, maybe you can delve deeper now into types of insurance. There's the health insurance you've mentioned. Is it motor vehicle? Or
Yes.
Yes. Which other types of insurance as well?
So of course, health. There's life. There's motor vehicle. There's domestic. There's industrial. Even for those who have companies, group life insurance, WIBA, group personal accident, which you can even insure yourself personally. That in case I get an accident, then I probably get a payout.
Yeah.
So it ranges all along, even to you know, those who go for what you call internship. There's also that cover that you get, personal accident, that you insure yourself. Yeah. Yeah. Now,
for example, you're working at a company. Maybe you've worked at that company for, let's say, 10 to 15 years, and they suddenly shelved down people, and unluckily or unfortunately among the people who are shelved out. So can you claim something from that company in terms of, I want you guys to compensate me, but in an insurance format? That one is a different category of claim.
There are two types now. In this case, the employer could have that kind of insurance cover, that in the event whereby I have less cash flow and I need to lay off my employees, the insurance company will come in through and probably help me pay out these people as they exit.
Right.
In the same case, you can go to insurance company and insure yourself.
Yes.
That in any case, when I'm declared redundant or the company lays me off, then probably you guys will come and pay me out some assured that will keep me going as I look for the next job available.
Yes.
Yeah. So it works both ways.
It goes
and
both
the insurance, you know, probably have those kind of arrangements. I know even employers who have what we call gratuity.
Yes, but then what is gratuity? I was trying to read about that.
Yeah. So gratuity, the employer, or probably is an arrangement that the employer says that at any point when an employee is working for me, they earn a specific amount of money per year.
Right.
So I know most cases it's usually half salary. So if your salary is 50,000 shillings, for instance, per month.
Right.
So the employer says, for every year you work for me, you earn half of that amount.
Right.
As an amount that I'll pay you out at the point of exit. So if you work for 10 years, that will be 25,000 shillings times 10, which is 150,000 shillings that you are paid at the point of exit. Of course, the government...
Are there deductions? Of course, there's those statutories now. I think that's when it's messing up.
Yeah. So at the point of exit, when they pay you that 150,000 shillings, you have to pay 30% tax from that amount that's being paid to you, because the government estimates that's a salary that was just postponed. You're being paid at that point. So they come for your money and they get 30% of tax. Yeah. That's why we advise employers that it's best to bring that gratuity under what you call a pension arrangement.
Yes, I love that one. Yeah.
Yes, yes.
And also the Retirement Something Act.
Yes.
The Retirement Benefits. Nice, yeah. So will that maybe help to even give it a facelift? If this government right now decides, like, let's have it. But of course, in the finance bill, I read about it, there's a place where they're saying they'll even deduct pensions. There's a tax that's going to be implemented that will be deducting for every pension somebody gets, there's an amount that exits. Yeah. I
know. So, of course, maybe just to try to explain it, in terms of pension savings, well, the Finance Act doesn't somehow lenient for the pension benefits. Previously, there's an amount that's tax allowable at the point of contribution. Right. So, for instance, you earn a salary of 100,000 shillings and you are paying, let's say, 20,000 shillings to a pension scheme. This 20,000 shillings is tax allowable. It's not taxed. Yes. So the tax, or the pay-as-you-earn tax, applies on the 80,000 shillings, less that 20 that you paid. Now, the government just say that in the finance bill that they want to increase that amount to 30,000 shillings. That's tax allowable. At the point of contribution, it's not taxed. Right. Up to 30,000 shillings that is saved to a pension scheme. But any amount
meaning that, is it voluntary or it's still statutory? Like you can see a must. It's not like, right now the NSSF and the rest.
Yeah, of course the NSSF contributions are tax allowable. They're not taxed at point of contribution. So same case applies to any amount that you contribute beyond that in terms of pension contributions.
Yes. Yeah. I was checking out, there's a term called deductible. Is it deductible or deducible?
Deductible.
Or deductible, right?
Deductible, yeah.
Yes, you can explain about deductible as
well. So tax deductible means that the amount is not taxed at the point of being accessed, or the point of being contributed. So if an amount is tax deductible, means that it's not taxed at the point of being given to you or being saved. In that case, same case applies for even insurance company in insurance. Now that talking about insurance here. Yes. If you have an insurance policy that goes for 10 years and beyond, then any premiums you are paying to that insurance company
Yes.
Is not taxed. So if from your gross salary, if you declare that you have an insurance policy that covers, I think it's that point of now that we are filing our returns.
Yes.
They say declare if you have a life insurance, and you declare yes. For what period? 10 years. Any amount of more than 10 years, there's a tax allowance that you get.
And a lot of people prefer not to declare.
People don't declare because they find it's more difficult in terms of filing the return, so they just let it go. But if you declare, then there's a tax allowance that the government will pay you back. In fact, if that was taxed at the point of payroll.
You've mentioned the word premiums, and to my understanding, I feel I'm getting it as a monthly contribution.
Yes.
Is this exactly?
Premiums is the monthly contributions that you pay to insurance company towards an insurance policy that you have.
Right.
Could be monthly, could be annual, depending on the arrangement.
Yes.
I know mostly health or medical covers are usually annual premiums. So you pay one time in a year, and you get that benefit for the entire year.
Right.
For life insurance, probably most of them allow you to pay either monthly, could be biannually, quarterly, or even annually, depending on how stable of course your bank account is. For somebody who's trying to figure out, maybe they are trying to understand, like, what kind of insurance do I want? Is there do they need guidance in terms of, maybe you could have taken the wrong type of insurance if you only could have consulted Abraham, you would have gotten the right insight. So for a person who is clueless and green, how can they take on that journey of finding the right insurance cover? And then, but there's been a lot of these Ponzi schemes that are scamming people. You think you subscribe into a valid insurance cover, kumbe you're just being conned and scammed. So for a person who wants to take on that journey, where do they begin from if they were to seek that service from you? Probably I advise that, you could come to me directly, come to Octagon Africa, where we advise clients, across insurance companies. Being an insurance broker, we work with any insurance company that comes across. And of course, we have to do our due diligence, make sure that the company is registered with IRA, and it's probably a company that is reputable in terms of, paying claims.
Yes. Claims is like, this and this happened to me, and I want compensation.
Compensation, yes.
So are you able to rise up to the occasion and fulfill it, right?
Yeah. Sure. Okay. So we have to take you to a place that we are sure that, once you make that claim, that money is paid out to you at the shortest time possible. We all need insurance. That we can agree. That
one is a must.
Emergencies happen. You get ill. We've had people who have had, urgent medical needs. And we've come to contribute to them, to help them, support them towards, getting better. So health insurance is first something that we all need. That's why I think the government is trying to work on the shift. Of course, collecting the money is one thing, but running it is another.
Another thing.
We hope that things run smoothly.
Right.
Life insurance is also quite important. Even at our age, young people, getting a job and starting your life, you need some loan here and there just to make life keep going. You need a car, probably you can't raise that money. You can have half the amount, probably seek the other with a loan. We even have student loans that we're already servicing. The help and everything. If anything were to happen to you with a young family, maybe you have a mortgage, you need to have insurance that can come up to support these people in the event that you are not there.
Yes.
And that comes in that the life insurance endowment and all that kind of insurance that if you have to have that money, God forbid, if anything happens to you, there's a payout that must be paid out to your beneficiaries, the people that you're leaving behind. So that helps them settle those loans that are probably coupled up. To avoid probably taking your properties or even your land or maybe your house just to repay what you already owe. So it makes people more disgraced or more struggling than you left them. Right. But insurance in that case now comes up to support and probably pay out that loan to support the people that are leaving behind.
Yes.
We also have what we call last expense cover.
Last expense cover.
Last expense or funeral or benevolent. So in the point whereby you're insuring maybe your parents, maybe your children, maybe your spouse or even your siblings. That in the event someone passes on, even yourself, there's a payout that comes out to support that kind of arrangement.
And it's like some sort of compensation to the people that have been left behind. More like, so and it can even be in millions, right? Because I've seen, I think last year, where there's a friend of mine who was saying, they received a lot of money from their dad who passed on. And I was like, how is that possible? But then there's something she said. She said that she was required to have her own insurance herself. Now, instead of like, your father took an insurance or your mom. So when it comes for treatment, instead of you receiving your dad's, they now want your own personal insurance. I don't know if that's contradictory. Is it right to, you should have your own insurance and not like a family insurance?
Yeah, it cuts across. So the father could have a cover that covers himself and covers you.
Right.
You could also have a cover that covers yourself and probably covers the father. So at the point when the father passes on, the payout comes for the father's insurance, and you also get a payout from your own insurance for covering the father.
Right.
Yeah, so it works across. So that payout coming from both sides, and probably maybe the mother also had insurance that covered the father as a husband. If your siblings also have a cover that covers the same father, you all get a payout that probably supports that kind of process. Of course, there's a limit that for any given life, the IRA is very clear that you can't go beyond $1 million. So the maximum payout for any life is, for the sake of last expense or funeral or benevolent cover, is a maximum $1 million. So if we all cover our father who passes on, and we all have an insurance cover that is covering him, the payout that comes to for the sake of his life cannot go beyond $1 million.
What if he had accumulated more than that? And let's say maybe if he had 5 kids in the family, and each of them is claiming to have that insurance.
Well, then the payout will be $1 million, which is split across.
Also, they'll have to split across.
Split across, yes.
Right.
Yeah.
Wow. So it means it can't accumulate and go beyond the 5 million?
Not really.
For example, if they've worked maybe for that company for like, let's say 10 years.
Okay. That works differently. Of course, there's what we call group life, and there's what we call last expense. Last expense is purely works like motor vehicle insurance. I've insured my car, which is worth 500,000 shillings, and I say that when anything happens, you pay me back 500,000 shillings.
Right.
So we are saying that for this life, maybe I insured my life for 100,000 shillings.
Right.
So at any point when I pass on, my family gets 100,000 shillings. Now, group life insurance, or what we call the employer arrangement, is whereby the employer says that at any point when my employee passes on, then they get 5 times or maybe 8 times their annual salary. So your salary annualized times 5 is what is the payout. That works differently.
Right.
And at any point when the parent or maybe the member who passes on, at that point in time, then the family gets 5 times or 10 times annual salary just to support them for that period before they get back on their feet. So it works quite differently.
Yeah. Let's imagine for somebody who wants to maybe try to contrast between a good insurance cover and one that's Ponzi. What exactly is usually happens when somebody say, hey, Kumbe have been contributing to a scammer. So maybe are there characteristics of a legit form of insurance, an insurance cover, and this is what you can tell about this is not legit, this one is not legit. This one is under, is it you call it the Insurance Regulation Authority?
Yeah.
Yeah, maybe you can say some of the characteristics to our viewer so that they get that.
I think the first thing that you need to know about insurance, the IRA has listed all insurance companies that are registered in the country, which probably gives you a view of who is licensed to give insurance and what kind of insurance, because no insurance companies have the same kind of insurance that they should give. Secondly, maybe just to advise is that before you buy insurance, just like you do window shopping, when you're going to buy maybe something, maybe a cloth or something, you probably go into 2-3 shops before you decide to buy that kind of cloth or maybe that kind of piece that you want to buy. Maybe even if it's a phone, you'll probably go through 3-4 shops before you decide that, okay, I want this phone. Same case for insurance. Please don't just walk into Jubilee and say I want insurance and you get one insurance. So we advise that getting insurance is good to go through a broker. We know that a broker probably wants to charge you more to get something. The insurance industry in terms of brokerage works differently. The broker now actually goes to the market. Are
there these guys who are on the streets who say, hey, I work for Jubilee or I work for Octagon and I have this and that? Are there those kinds of people?
Not really. Brokers are licensed.
Oh, they're licensed.
There are companies that are licensed also with the IRA to offer brokerage. We have brokers. The chain has different. We have insurance, the company. The insurance company has brokers that work under them. Then we have agents.
Right.
Agents who work under the insurance company or under the brokerage. And probably, the biggest people. I think my encounter with people who've said that they've been scammed in insurance is because probably someone who sold them this insurance cover was a friend or maybe a colleague, maybe someone that they just heard of and said, okay, let me take this insurance up. And the challenge that we have in the insurance industry right now is mis-sell or misinformation. Someone will give you the good side of the insurance cover, but probably not give you, what are the things that are not
the gray areas.
The gray areas that probably
yes,
you should
around
know.
maybe this insurance policy or cover, right?
The best thing I tell people, when you're selling insurance, please give somebody both sides of the story.
Right.
This is the good thing about this insurance cover, and these are the things that probably will not work for you, or what we call what are not covered.
Right.
In the event that this happens, then this will not be given to you. Like for instance, I know people who've taken up education cover, or endowment cover. Endowment cover says that you must be tied for 3 years. You must pay 3 years premium before you can, surrender the policy.
Right. Surrender the policy means that
you stop contributing completely and say, I don't want it anymore.
Is it possible to terminate and say,
yes.
what, at this point, I no longer have income to continue contributing?
Yes, it's possible. But you must pay 3 years premium before you can surrender and say, I cannot pay it anymore.
And that's crippling.
Yeah.
It's crippling, right?
It's actually the IRA regulation.
Right.
And most of them probably work around that. So, most of us just, find an insurance policy and we start paying for 2 months, 3 months, 6 months, and we say, oh, I want to stop.
Right.
And tell people, I want my money back because I can no longer pay.
No longer be able to sustain.
So at this point in time, the insurance will not give you that money back.
Right.
They tell you, probably we can redate, probably wait for you to get money, then we can continue paying. But before you surrender, you must pay at least three years premium. If you pay 3 years premium and you say, you want to stop completely, there's a payout that will give back to you. Probably not the same amount that you've saved, but is what they call this. They call surrender value. They'll give you an amount back of what you paid the insurance company.
Yeah.
Insurance is meant to cover you in the event that something happens.
Right.
So if I'm taking insurance,
it's like jinxing. I might have a bad experience, and God forbid. But it's good to always be prepared.
Yeah. So if I'm taking up a life cover that is saying in the event that I pass on, the insurance company will pay, let's say, 3 million shillings back to my family. I start paying the premiums for 1 year.
Right.
In the event that I pass on a year after paying these premiums, the insurance company will actually pay this 3 million back to my family. Right. But after 1 year, then I tell people I want to stop this insurance cover. Remember that you've already been covered for this 1 year. If anything will happen to you for this 1 year, you will have paid these 3 million shillings. But you want to just stop now completely and stop contributing. Right. While we've already covered you for this 1 year, so that probably doesn't work with the insurance company. They tell you, what, you have to redate, probably wait, or continue paying for at least 3 years, then you can surrender. But if you continue paying for a period of even 4, 5 years, and maybe your cover was for like 10 years, the insurance will actually pay you back as per the agreement that you had. Yeah.
So it's possible to have like long-term and short-term. Yes. So you'd rather opt for the short-term ones?
For the short-term ones, yeah.
Yes, okay. I'm told we have to exit, but before you actually tell people how they can get to seek your services, can things like age, let's say race, religion, and now we have the Gen Zs, because somebody was saying, why do I Gen Z? And you mentioned actually that you even need to ensure that iPhone you have. So I don't know if things like those really matter as factors that contribute to why maybe you should get this type of insurance cover and not this one, and this one, and not the other.
Well, it's good that it's coming at the very tail end of this conversation.
Yeah.
Insurance companies have actually given lower premiums for those of us who are young. Gen Zs, millennials, those of us who are of younger age, we are more or less risky, as they call. So the premiums, if you're looking for a medical cover, and your father works with someone who is 25 and someone who is 50 years, if you get a medical quote or an insurance quote, you who is younger will get a lower quote. You pay less premiums per month than someone who is older. That's something that actually, says that the earlier you take insurance covers, the better. The better, right? Because if you take when you're young, then you're probably paying less premiums for a same payout. And someone who is 50 is taking up the same insurance for the same payout. I might pay 3,000 shillings for but someone who is maybe 50 years will pay maybe 5,000 shillings for the same cover that I'm being covered for. So something that we really need to consider as Gen Zs or maybe millennials. In that case, take up insurance.
Interesting conversation. I wish we could continue more and more, but we have a lot coming up. So tell people where they can get to see your services and get to, also seek help from you very fast with your social media as we exit.
Okay, sure. Thank you so much. So at Octagon Africa, we are very live on social media, TikTok, YouTube, Facebook, LinkedIn. At Octagon Africa, just find Octagon Africa. You'll find us on the socials, and we'll be able to support you. Our offices are even here in Parklands,
Right.
Nairobi.
They're just in town here.
Yeah,
Okay.
opposite Parklands Police Station. We are there on the 8th floor of West Park Suites.
Right.
You can come in and we can take you through insurance policies that you wish to take and probably advise you accordingly. As a broker, like I said, we work with any insurance company that you know of. As long as they're registered and are reputable in the industry,
Right.
we'll guide you through them and take you through those covers so you're able to understand clearly why and how, which one is important to you.
Right.
Yeah.
So is there a website or a link or a channel?
octagonafrica.com. That's
That
that's
is
the
the
website.
website.
And you'll be able to get everything that you need to get from that website.
So I'm sure that you visit. Thank you so much, Abraham.
Thank you.
And by the way, I schooled together with this guy. It's just
Yeah.
that I was 2 years ahead of him at Fountain Gate School.
Fountain Gate School in Bungoma.
Right, absolutely. Thank you for coming through. We take a very short break. We come back with the rest of the conversation. It's all matters Gen Zs, and you don't want to miss this at Y254 channel, at Brand Circle 101, at Abraham Masibo, by the way, right?
Yeah,
Ensure that you
Abraham.
also, Masibo Abraham on all social. So coming back in just a bit.
Thank you.